Welcome to 321 Studies. This is Advanced Taxation. In today's lesson, we shall be looking at value-added tax. In today's lesson, we shall be looking at value-added tax. Introduction. You may be asked what VAT is. What is VAT? VAT is an indirect tax on goods and services. It is a consumption tax on goods and services consumed. So when you purchase goods and services, you are required to pay VAT. So we said that VAT, which is value-added tax, is an indirect tax. An indirect tax because the burden is shifted to someone else, usually the consumer. So the burden is shifted from the manufacturer to the consumer. In fact, the channel of distribution from the manufacturer to the distributor, then from distributor to the retailer, and from the retailer to the final consumer. Now, actually, it is the final consumer that pays VAT. That is why it's an indirect tax. The burden is shifted from the original taxpayer to the final consumer. So VAT is an indirect tax is levied on goods and services. An indirect tax levied on goods and services. It is a consumption tax. Is a consumption tax levied on goods and services consumed. So what that means is that if you don't consume goods and services, no one will ask you to pay VAT. So VAT is on consumption. You are paying VAT because you have consumed goods and services. So it is on consumption. Now we have the 1993 Act, and we have the Finance Act 2019, and of course we also have subsequently we have the Finance Act 2020. All these are the enabling acts with regard to VAT. Okay? We have recent amendments, Finance Act 2019 and also Finance Act 2020. Now, we have what is known as output VAT and input VAT. Now, output VAT is the VAT on sales. If goods are sold, the VAT element on the goods sold is output VAT. Okay? Is output VAT. Then we have input VAT, VAT on purchases. So when you purchase an item, the VAT element in the purchases is known as what? Input VAT. So we have both the output and the input VAT. So that is it about what VAT is. It is an indirect tax on goods and services. It is also a consumption tax levied on what? Goods and services consumed. And we talk of the enabling and value-added tax Act 1993 as amended, and we have Finance Act 2019 and subsequently 2020 as amended. Okay, now basic characteristics of VAT. The examiner may ask you to mention the characteristics of features of VAT. From our explanation above, you can see that VAT is one, a consumption tax, okay? is a consumption tax. It's levied on goods and services consumed. Like I said earlier, if you don't consume goods and services, you will not be required to pay VAT. You are paying VAT because you have consumed goods and services. So one of the features of VAT is that it is a consumption tax. Number two feature is that it is a multi-stage tax. It is a multi-stage tax. Earlier, I have explained this. I talk about the channels of distribution from the manufacturer to the wholesaler to retailer, then to the final consumer. This channel of distribution. Now you see that why we say VAT is a multi-stage tax is that the manufacturer has to buy its raw materials. So on buying raw material, the manufacturer will pay VAT. And remember I told you VAT on purchases is input VAT. So the manufacturer pays input VAT on the purchases of raw materials and components. Now, having purchased the raw materials, manufacture the products, the manufacturer sells the products to who? The wholesaler. Sells to the wholesaler. Okay? Now the wholesaler is the one buying. Now as the wholesaler is buying, the wholesaler is also paying input VAT. To who? The manufacturer. The manufacturer is selling. So the manufacturer collects what? Output VAT. Remember I will say VAT on sales, it output VAT. So the manufacturer sells the goods manufactured to the wholesaler and collects what? Output VAT. While the wholesaler is the one paying, the wholesaler pays input VAT on the purchases made. Now the wholesaler also will recoup his VAT by selling to the retailer. So the wholesaler will get output VAT on the goods sold to the retailer. Now you see all these things happen at different stages of distribution. It happens at different stages, at the manufacturing stage, box selling, retail level, and before the goods goes towards the final consumer. Now the final consumer is a last man standing. It doesn't have any other person to sell to. The final consumer consumes the product. So that is why the final consumer is the one paying the VAT, because the VAT paid on purchases, he cannot recoup it from what? Sales, because it's not selling, it's consuming the product. So VAT is a consumption tax, and it is what? A multi-stage tax. It is levied at these various stages we have mentioned. And number three, VAT, the incidence of VAT is on the final consumer. Like I said earlier, it is the final consumer that pays the VAT. It is a final consumer that pays the VAT. So it is on the final consumer. So these are the three basic features or characteristics of VAT. Now the next thing we'll look at is the rate for VAT. What is the rate for VAT? Now, recently the rate for VAT has been adjusted to 7.5%. Before now we used to have 5%. And you know our VAT rate in Nigeria is among the lowest, if not the lowest, okay, in Africa. So recently the rates have been increased by 50%, from 5% to 7.5%. So the standard rate for VAT now is 7.5%. That is the standard rate. Standard rate, 7.5%. Okay? That is the standard rate for VAT. Although we have zero rates, okay? We have some items that are taxed at 0%. So zero rate item. But the standard rate for VAT is now 7.5%, effective from 1st of February 2020. Effective from 1st of February 2020. So take note, henceforth, the VAT rate is 7.5%, and it took effect from 1st of February 2020. Okay? Now, like, apart from the standard rates, I told you about zero rates or zero-rated items, which I said is at 0%. So we have items that are VATable at 0%. Okay? We don't use standard rates on those items. We use zero rates on those items. But the standard rate for VAT is 7.5%. Now, the next thing we look at is the objectives of VAT. The examiner will ask you to list or state the objectives of VAT. Of course, you know the main objective is to generate revenue, okay, to increase government revenue or to generate revenue for the government. So government need money, government want to raise revenue, and one of those ways is VAT, value added tax, okay. Number 2 is to reduce tax evasion, okay. The second objective of VAT is to reduce what? Tax evasion. Reduce tax evasion is a kind of deduction at source, okay? You see that some taxpayers, some like consumers or some taxpayers, you see that if they are not taxed at source, you see that at the end, they will not pay tax. So taxing them at source is a way to reduce what? Tax evasion. So one of the objectives of VAT is to reduce tax evasion practices. Number 3 is to increase exports, to increase export, to encourage exports of made in Nigerian goods, okay? To encourage exports. Now, if you look at, you see we have what is known as oil exports, and we have non-oil exports. Now, if you look at the VAT Act, you see that oil exports are exempted from VAT. So if you export oil products, they are exempted from what? VAT. Now, we have non-oil exports. If you export every other goods and services, non-oil exports, they are zero rates. They are zero rated. That means they are VATable but at 0%. Now, 0% means no output VAT, okay? No output VAT, 0%. So this is to encourage exports, to encourage people or companies to export made in Nigerian goods and services. Number 4 objective is to make the system transparent, to make the tax system more transparent, very clear to everybody, every taxpayer, to make it more transparent, okay? Number 5 is to eliminate multiplicity of tax, to eliminate multiplicity of tax. As you can see, VAT, as we will see as we go on, you see that VAT is collectible by the Federal Inland Revenue Service. Only the Federal Inland Revenue Service has the sole authority to collect VAT. One of these is to eliminate what? Multiplicity of tax, okay? Multiplicity of taxes. Now, the next one is to improve tax compliance, ensure that the taxpayers complies with the tax law, and so on and so forth. So we have looked at the objective of tax. We say increase government revenue, reduce tax evasion, increase exports, make tax system more transparent, eliminate multiplicity of tax, and improve tax compliance. So the next thing we look at is administration of VAT. Administration of VAT. Now, like I said earlier, administration of VAT is vested in the hands of the Federal Inland Revenue Service. Federal Inland Revenue Service. So they are the sole authority for collection of VAT, okay? So administration of VAT is by federal. So no state inland revenue, internal revenue service doesn't have anything to do with VAT. And also the local government revenue committee doesn't have anything to do with what? VAT. So VAT is collectible by only the Federal Inland Revenue Service. So that is everything about administration of VAT. Collection, levying, assessing, accounting for the VAT so collected is solely done by the Federal Inland Revenue Service. Okay? So Section 7 of the Act specifically states that VAT shall be administered and managed by the Federal Inland Revenue Service. Okay? So that is what the Act says. The board may do such things as it may deem necessary and expedient for the assessment and collection of tax, and shall account for all amounts so collected in accordance with the provision of the law. So the Federal Inland Revenue Service Board is saddled with the responsibility of assessment, collection, and accounting for all the amounts so collected in accordance with the Value Added Tax Act. Okay, please take note of that. Now, the next thing we look at is VAT collected by the Federal Land Revenue Service, how it is shared. Now, we said that the Federal Land Revenue Service Board is the sole authority for collection of VAT. Now, when having collected this VAT, how is it shared? How is it shared? Now, the VAT so collected is shared among the 3 tiers of government. It's shared among the 3 tiers of government, with the federal government getting the lowest. The federal government gets 15% of the VAT collected, while the state government get the highest 50%, and the local government gets what? 35%. So that is how it is shared. So say federal government gets 15%, the state government gets 50%, whereas the local government gets what? 35%. That is how the VAT collected by the Federal Land Revenue Service Board is shared among the different tiers of government. So the federal government, like I said, gets 15%. The state government gets 50%, and the local government gets 35%. The local government gets 35%. So that is how the VAT collected is shared. Now, the next thing we look at is vatable goods and services. Now, one thing you should know is that VAT is levied on vatable goods and services. VAT is levied on vatable goods and services. VAT is levied on vatable goods and services. So it means that not all goods and services that are vatable. We have goods and services that are vatable, and we have goods and services that are exempted from VAT. Okay, so VAT is levied on vatable goods and services. Now, what do we mean by vatable goods? Vatable goods include tangible and intangible goods. So it's not just tangible goods. All right? It includes intangible goods, like trademarks, like copyrights, okay? All those are what? Intangible goods. So vatable goods is not just products like tangible goods. No, it also includes what? Intangible goods. So, but as far as those goods, those tangible and intangible goods are manufactured in Nigeria, as far as they are assembled in Nigeria, they are installed in Nigeria, or they are supplied or imported in Nigeria. So goods and services, what we mean by vatable goods are those goods and services, including tangible and intangible goods that are manufactured, assembled, installed, supplied, or imported into what? Nigeria. Those are vatable goods. And also services, all services that are rendered by persons in Nigeria. All those services that are rendered by person in Nigeria are what? Vatable services. So vatable goods, those tangible and intangible goods that are manufactured, that are installed, that are assembled, that are imported in Nigeria. While vatable services, all those services rendered to a person in Nigeria, irrespective of where the service was rendered from. As far as the recipient of the service is in Nigeria. That is an example of what? Vatable services. Okay, so we have looked at goods. We say goods include, when you say goods, include tangible and intangible, such as articles of trade, like we said earlier, which is tangible. Right in goods or property, that is intangible. Right, that is intangible. Right in mineral resources, intangible. Copyrights, trademarks, all these are intangible, like we said. Assets, motor vehicle, oil wells, aircraft, ships, building, road, jetties, and so on and so forth. All these are goods. So goods could be tangible, could be what? Intangible. All these are goods. Okay? Now, services. Services include, like I said earlier, services rendered in Nigeria. by a person physically present in Nigeria at the time of providing the service, or services provided to a person in Nigeria, regardless of whether the service are rendered within or outside Nigeria. Now, the main thing about services is that the services are rendered in Nigeria. Okay? The services rendered in Nigeria could be rendered by a person that is present in Nigeria. So whether the person that rendered the service is present in Nigeria or whether the person that rendered the service is outside Nigeria, but as far as the recipient of the service is in Nigeria, then that service is a vatable service in Nigeria. Are we okay with that? So services include services rendered in Nigeria by a person that is physically present in Nigeria, or services rendered to a person in Nigeria, regardless of whether the service are rendered within or outside Nigeria, regardless of whether the person that rendered the service is within or outside Nigeria, as far as the service is provided to a person in Nigeria, as far as the service is rendered in Nigeria, then that is what a vatable service. Now, the Finance Act also talk about when goods are said to be delivered in Nigeria. So the examiner will ask you, when is goods said to be delivered in Nigeria for the purpose of VAT? When do you say for the purpose of VAT that goods have been delivered in Nigeria? When is goods said to have been delivered in Nigeria? We have said it to some extent earlier. Goods and services are deemed to have been supplied in Nigeria if those goods are physically what? Present in Nigeria. So you said that goods and services have been supplied in Nigeria if, one, the goods and services or the goods are physically present in Nigeria. So if the goods in question is not physically present in Nigeria, then you can't say the goods have been supplied. So for the goods to be supplied, it must be physically present in Nigeria at the time of supply, at the time it was imported for use by persons assembled in Nigeria or installed in Nigeria. So once the goods is physically present in Nigeria, we say the goods have been supplied for the purpose of VAT. And also, once the beneficial owner of the rights or over the goods is taxable person in Nigeria, once the person to whom the goods is supplied is a taxable person in Nigeria, then the goods have been supplied in Nigeria. So we have two conditions for us to say goods have been supplied in Nigeria. One, if the goods is physically present in Nigeria. Two, if the beneficial owner of the rights over the goods is a taxable person in Nigeria, and those goods or rights is situated, registered, or accessible in Nigeria. So if the goods are physically present in Nigeria at the time of supply, and if the recipient of those goods is a person that is taxable in Nigeria, then we say the goods have been supplied in Nigeria for the purpose of VAT. Now, the examiner will also ask you to explain taxable persons with regard to VAT. Who are the taxable persons with regard to VAT? The taxable persons are both individuals and corporate body. So an individual is taxable. An individual like an employee that purchases goods and services is vatable. Okay? A sole trader is vatable. A partner is vatable. A trustee is vatable. So all these are individual. Of course, a company is also what? Vatable. So these are vatable persons or taxable persons with regard to VAT in Nigeria. Now, taxable supplies. Taxable supplies. You have to pay much attention to this definition of taxable supplies. Okay. Now, the taxable supply is any transactions for the sale of goods or the performance of services for consideration in money or money worth. As far as the consideration is in money or money worth, then that is a taxable supply. Any transaction for the sale of goods or the performance of services. Any transaction for sale of goods. Okay? Transaction for sale of goods, as far as the consideration is paid in money or money worth. Transaction for performance or rendering of service, as far as the consideration is paid in money or money worth. That is a taxable supply. Now, the value, what make up the value of taxable supplies? The value of taxable supplies is the gross inflow of economic benefits. The gross inflow of economic benefits. All the money and money worth received. That's what it means. The cash received, the revenue received, all the receivables, all the assets arising from economic activities, including sales of goods, supply of services, rent, royalty income, fees, rights, etc. So all these are taxable supplies. The cash will make up the taxable supply, the revenues will make up the taxable supply, the receivables, the assets, as far as they arise from economic activities, amounts, the cash you realize from sale of goods, supply of services, rents, in case you have rental property, royalties, okay, fees, rights, and so on. So all the money and money worth received is what gives you the value of taxable what? Supplies. Now the next thing we look at is exempt items. Exempt items. Like I said earlier, not all the goods and services are VATable. We have some services that are exempted from VAT. We have also some goods that are exempted from VAT. So we want to look at now some of the goods exempted from VAT. The goods exempted from VAT. Number one, goods exempted from VAT, after which we move to services exempted from VAT. Number one, goods exempted from VAT is all medical and pharmaceutical what? Products. All medical and pharmaceutical products is exempted from VAT. So if you sell any medical products or any pharmaceutical products, then those goods are exempted from VAT. If you buy, okay? If you are purchasing maybe syrup, all those are exempted from VAT. Then we also have basic food items. If you purchase basic food items, like all those cooking ingredients, like rice, Maggi, all those items, all those basic food items, yam, they are basic food items, honey, and so on. So all these basic food items are exempted from VAT. Also, if you purchase baby products, they are exempted from VAT. Books and educational materials are also exempted from VAT. So if you purchase books and educational materials, they are exempted from VAT. If you purchase baby products, they are also exempted from VAT. If you purchase plants, machineries for use in export processing zone, in free trade zone. So all those plants are machineries that are purchased to be used in EPZ, export processing zones, are exempted from VAT, provided that 100% of such company is for export, provided that all the goods manufactured by that company is all what? Exported. So all those plant and machinery that are used in export processing zones are exempted from VAT. Now, also, let's look at in addition to that, we have looked at A to E. So in continuation, we have looked at all medical and pharmaceutical products, all basic food items, books and educational materials. We have looked at baby products, we have looked at plants and machinery used in EPZ, and so on. We shall continue in the next lesson.